Happy Friday, traders. This is Fawad Razak, Dollar Market Analyst for City Index. Day is the 24th of January. So the markets have been all over the place, with FX markets in particular being quite busy today. The US dollar initially sold off on the back of Donald Trump's comments regarding China's tariffs before it bounced back a little bit, and now it's coming down once more. So the dollar yen in particular has been quite busy because we had the Bank of Japan policy meeting overnight, where the central bank hiked interest rates by 25 basis points as expected. The central bank did raise its inflation forecast, which was a little bit more on the hawkish side, but comments from the central bank's governor were a little bit more on the dovish side. So that caused the Japanese yen to weaken against the likes of the euro, the Aussie, the Kiwi, but against the US dollar, it didn't weaken too much because the US dollar was already on the way down, with the euro dollar, for example, hitting the 105 handle, while the Aussie dollar rallied to a new multi-week high. So the dollar yen is at an interesting area to watch. This area right here between 156 to 156.75. I've shaded this area in gray. Previously, you can see that this area was support and resistance. We broke below it, but we didn't fall off a cliff here, and the test of the 155 support has held on at least 3 separate occasions, including today. So the trend is still bullish, technically speaking, but it could change if we break below the trend line and move below the 155 handle, ideally on a daily closing basis. Until that happens, you have to take it one step at a time, because we're seeing the dips continue to be bought in this currency pair. But there is fundamental reason why the Japanese yen could start to come back, and that's because yields in Japan, as you can see in the bottom here, this is the 10-year yields. They have been on the rise for several weeks, months even, while in the US, the top chart here is the 10-year US yields. They have been falling of late. I know they bounced back a little bit in the last couple of days, but as you can see, it's still within the prior range, whereas the Japanese yields are continuing to push higher amid a hawkish leaning central bank over there. So as the yield spread narrows between Japan and the US, and yields between Japan and the rest of the world, really, that could put downward pressure on all the Japanese yen currency pairs like the dollar yen, the euro yen, etc. But for now, support's being defended here. Let's see if that will change. We did have some economic data from the US, which caused the US dollar to weaken a little bit further in the afternoon trading. For example, the flash services PMI came in at 52.8 when 56.4 was expected. So quite a bit of a miss over there. The manufacturing PMI was kind of in line with expectations, rising a little bit from the previous figure. And existing home sales were also on the positive side, but the consumer sentiment index from University of Michigan came in a little bit lower than expected, and that caused the dollar to weaken in the last couple of minutes. So looking at a few other currency pairs, then the euro dollar is looking quite interesting. I highlighted this doji candle yesterday in one of my reports, where it bounced from the 21-day exponential moving average, and after it broke this bearish trend line, and that candle preceded today's rally, where the euro dollar is now trading at around the 105 level, which is now a massive level of potential resistance to watch, having served as support in the past. Over here, for example, in October of last 2023, and again in November and December, before we finally broke below it. So it's a very important level. I know we're a little bit above it, but things could change with Donald Trump making the headlines every minute or so. Watch out for a potential retreat in the dollar yen, in the euro dollar even. And if we do pull back, then the next key support to watch would be the high of that doji candle from the previous day. Or let me just get rid of this, the high of that candle, or the high of Wednesday's range coming in at 104.57, and the other one was at 104.38. So this area here could be in the next potential support to watch if we do get a small pullback on the euro dollar in the week ahead. Now, speaking of the week ahead, it's going to be a very interesting week for the markets. We'll have the ECB rate decision coming up, a 25 basis point rate cut as expected. And we also have the Bank of Canada, as well as the Federal Reserve. The Federal Reserve is not going to cut interest rates, as we already know. The Bank of Canada is more likely than not to cut rates, but we shall see. For more analysis on those central bank meetings, make sure to read my report from earlier today. And for more insights, make sure to check out the news and analysis section at cityindex.com. I'll see you guys very soon. Take care.